Bloomberg Audio Studios. Podcasts, radio, news.
We begin this hour with a look at the energy sector. President Donald Trump pledging to expand production and lower prices with the threat of tariffs hanging overhead. For the next 30 minutes, I'm pleased to say that joining us now is the Chevron CEO, Mike Wirth. Mike, good morning. It's good to see you. John. I promised the first question earlier on this morning. I mentioned it on air. I wanted to know whether you've watched Landman on Paramount. Have you seen the program?
I have.
Okay, how accurate is it? Do you have to deal with cartels on a daily basis?
It is wonderful entertainment. Billy Bob Thornton is an amazing actor, and it's drama, right? And you need a little bit of a storyline. And so, there's certain aspects of it that are accurate and others that are probably just a touch exaggerated.
It sets up this conversation quite well, I think, for one specific reason. I think there's been a vibe shift in this country, captured by the election in early November, and also based on the content that people are consuming right now, including Landman. And in Landman, you see a much more pragmatic approach to things like fossil fuels, oil, and energy, and the kind of work that your company does. Do you think we are seeing that, a more pragmatic approach to the energy story now?
I think there's no question we're seeing that. I mean, you take a look at this administration that has come in, and rather than criticizing and almost in some ways ostracizing oil and gas, it's an administration that has talked about American energy abundance and using that to the benefit of the American economy, the competitiveness of American business, but not just oil and gas. The grid is a big thing for the administration and power generation, and so I think we're seeing a more balanced conversation. It's something I've been calling for years. Is in energy there are three things that matter, John. Affordability, because that underpins economic prosperity; reliable supply, because that relates to security and national security; and then environmental impact. And we have to balance those three things as we talk about energy. The conversation had become very unbalanced and focused on one of the three and not the other two. And I think we're seeing a move back towards a more balanced, and you use the word pragmatic. I think that's a very good word for the shift that we are seeing.
We definitely are hearing the shift in the conversation. We heard that at Davos, even though you weren't there. We missed you. I am curious about how much that translates into actual changes that you're making on the ground, with how much you're investing, how much you're planning to expand your footprint in the United States and elsewhere.
Yeah, we grew production last year 7% globally, almost 20% here in the U.S., largest production we've ever had in our history. Largest cash distribution to our shareholders. So we are growing. We're also doing it in a more capital efficient way. So we've been focused on getting more bang for each dollar of capital. You guys are talking a lot about capital this morning. And in a capital intensive industry, we have to always look for ways to be as capital efficient as we can be and as disciplined as we can be. And so we're able to bring new energy supplies to the market at a lower capital investment rate than ever before. We'll grow again this year in the United States, another 10% or so in the Permian. So demand for energy is at an all-time high, and it's only going up.
Last year, you had a record production, even under an administration that had a very different tone toward the oil and gas administration, the oil and gas industry. I just wonder how the vibe shift will change what your outlook is at a time when the rhetoric has shifted to the positive, but some of the proposals like tariffs might be headwinds in certain places.
Yeah, so I think your point's a good one, Lisa. The rhetoric kind of sets the mood music, but you actually have to see policy, right? And some of that's done through executive order these days. A lot of it would be best done through legislation. And we would like to work with both sides of the aisle to implement durable, balanced, and pragmatic energy policy. Things like permitting reform, which have gotten a lot of conversation, but we really haven't seen action yet on that. And it's difficult to build anything in this country, not just pipelines and infrastructure for our industry, but new power generation and grid modernization and other types of infrastructure. So we hope and are certainly willing to work with parties from across the spectrum to try to turn some of this vibe shift or more balanced conversation into what we think is good, durable policy.
Can you talk to us more about the permitting? These are things we hear about all the time.
Sure.
You're running a business. Could you help us understand how much that has held back your business?
No, it slows things down. It's very difficult. I mean, the Keystone Pipeline is a good example that was well documented, where a multi-billion-dollar investment that would have been good for Canada, would have been good for the United States, ultimately didn't happen because the permitting process can be hijacked by interests that are opposed to seeing investment in our economy. And so, look, everybody wants to see good protection of the environment and engagement of communities that are impacted by projects, but we need lead agencies that can take responsibility for these processes. We need timelines that are reasonable timelines to do the work, and then we need reasonable boundaries around the way these things can be litigated in the courts, and that needs to be done to enable more investment in this country.
This president clearly wants to change that. Uses phrases like drill, baby, drill. We're certainly drilling north of 13 million barrels of oil a day in this country, which is phenomenal. I often sit here, Lisa does too, and we'll say things like, and we'll hear it from Anne-Marie as well when she's here, how realistic is it to get that number much higher than the 13 million barrels we're at right now? You'd know it better than we do. How realistic is it?
Well, I think production in the U.S. is going to grow again this year. We certainly see in our business, I said our Permian production will be up 10%. In the Deepwater Gulf of America, we're going to go from 200,000 barrels a day to 300,000 barrels a day by the end of 2026. So there is production growth coming, but it's really driven by economics, a long-term view on supply, demand, technology, and policy.
Just to jump in, that last point, a long-term view on policy. How difficult is it to make these investment decisions? We talk about this vibe shift now. It could change again in 4 years.
It's very difficult, John. And so one of the things our company was criticized for a few years ago is we weren't jumping into some of the renewables as fast as others because the policy was unclear. And so we were doing basic research. We were investing in pilot plants. But multi-billion-dollar investments that are very dependent upon policy that could change quickly are something you have to think about when you're looking to deliver strong returns to your shareholders. And so we would like to see durable, long-term balanced policy because that does make the investment decision a little bit easier for companies to make.
One test case for this is liquefied natural gas. The U.S. is a massive producer of it. You're one of the biggest producers of it. There was a ban on exporting to Europe at a time when Europe was really dependent on the U.S. That has been lifted. Now there's the potential of tariffs being placed on some of those exports. How much can you start to lean into exports versus not due to some of this confusion?
Yeah, the tariff environment is obviously evolving here on a daily basis. Energy is a globally traded commodity, and LNG, oil, petroleum products, for the most part, now Canadian oil is a little bit different because it's really dependent upon pipelines, but those products can go to different markets. We've seen sanctions reorient trade flows. Tariffs are another instrument that can change the economics for producers and for consumers. And what you'll typically see, whether it's LNG or oil, is flows will move to different markets as producers seek the highest price for their production and as consumers seek the lowest cost for what they're looking to buy. And as long as supply remains in the market, you have markets well supplied, you generally start to see costs go up a little bit because there's increased transportation and some kind of friction in the system. But export decisions aren't heavily affected by those prospects, I would say.
Speaking of sanctions, just briefly, you have a waiver to operate in Venezuela. Is that the case?
We do.
Senator Rubio, now Secretary Rubio, said maybe the U.S. should reconsider that waiver. Are you in contact with them on that issue?
We're in contact with the current administration. We've been in contact with the first Trump administration and the Biden administration because the sanctions on Venezuela have been in place for years. And we work closely with the government to understand their objectives, to understand the limitations that are being placed through these licenses issued by OFAC, and to stay in full compliance with the laws.
Are you anticipating any changes at all, or too early to say?
Yeah. There recently was a trip down to Venezuela by a special envoy who brought back some Americans from Venezuela and arranged terms for, I think, Venezuelan immigrants to go back to Venezuela that are here illegally, and that seems to be, the latest. The general license that we operate was unchanged. It has been changed over the years in different ways, and that still could happen. We try to inform the government of the potential ramifications of a change like that, so they're well informed before they make changes in policy.
What would the ramifications be?
Well, under the initial Trump sanctions, Venezuelan oil was not allowed to come to the U.S. The Biden administration changed that. Gulf Coast refiners actually run a lot of the heavy grades that come from Venezuela. If you see sanctions on Canadian or tariffs on Canadian or Mexican oil, that may send some of that oil to other countries. And so the Venezuelan oil could be even more important. So it's things like that. It's how would this work through the system that we really try to help the policymakers understand.
Data center growth. There was a conversation only 2 Mondays ago about whether we've been overestimating the extent of data center growth we'd see, and alongside that, the amount of energy we might need. Did the DeepSeek story of the last week or so change your outlook at all?
It really didn't. If you look at the incredible capital spending that you've been talking about and the huge demand for increased compute from all the big hyperscalers, I think they all assume you're going to find more efficiency in the development of these models, the training and inference techniques that are used, and at the same time, we're going to need a lot more compute capacity. So the two big constraints are GPUs and, interestingly, electricity. We haven't seen real growth in demand for electricity for the last couple of decades in this country. We have taken a lot of reliable baseload power off the grid as coal plants have been shut down. We've had a lot of wind and solar, which are great and very low emissions, but they're also intermittent. And so the grid hasn't been modernized. The power generating capacity hasn't changed much. And we're poised to see demand from data centers, from the electrification of the vehicle fleet and other parts of our economy. And so there's a range of estimates, but I think nobody would tell you the demand for power isn't going to go up, and probably pretty significantly over the next few years.
That feels like a year ago, by the way. DeepSeek? What? I mean, honestly, it's just sort of amazing how quickly this goes. How do you sort of gut check people's understanding of the energy use that is required for this? And how are you planning to build out your footprint, what type of energy you want to invest in, and what your budget is like for that?
Yeah, so we talk to the people that are doing the work, right? And we're a customer of all the big tech companies, right? They help us in many different parts of our business. We've got relations with them. So we're looking to use these tools to improve our business performance. And over the last couple of years, the conversation has flipped. And they've said, how can you help us be sure we've got enough power at scale in order to deliver the products that you're looking for? And one of the things that's very clear is the hyperscalers want to move fast, right? There's a bit of a land grab, and you see it in the way the capital budgets are going up. And so things that are at a scale of 100 megawatts, 200 megawatts are different than gigawatts, which is really where their ambition is. What we've done recently is announced a venture with GE Vernova and a company called Engine No. 1 to collaborate and bring 4 gigawatts of power to market beginning in late 2027. So relatively soon, 7 of GE Vernova's biggest turbines that we've got delivery slots on, and the intent is to site those in places that can meet the need of these hyperscalers, reliable gas supply so that they can have long-term confidence in the energy off the grid, so they're not going through the grid and dealing with interconnect queues and the reliability issues, and ultimately also a desire to try to integrate lower carbon energy into this, whether it's through carbon capture, hydrogen, geothermal, and other technologies, something we know a lot about.
You said turbines, and those are natural gas turbines.
That's right.
How much do you think that natural gas could potentially overtake diesel and some of the gasoline that people use to fuel a lot of what currently gets generated?
In electricity, you're going to see, we've seen historically good demand for gas, and you're going to see more of it. You're going to see demand for gas for exports and LNG, as we were discussing earlier. In transportation, its use will be more limited. It has certain advantages, but certain disadvantages when it comes to vehicle transportation. And so I think you're going to see conventional gasoline and diesel, along with electric vehicles, really power the light-duty vehicle fleet and the heavy-duty vehicle fleet for the foreseeable future. I think you're going to see gas more in power generation and other parts of the economy.
Before we let you go, I know that the Hess thing has been messy. It's going to potentially close later this year. I know that there's a lot that needs to get worked through. Once that's gone through, how in the market are you to potentially consolidate? Because a lot of people are saying this is a market in the United States that still has a lot of consolidating to be done.
Well, we're first and foremost focused on the Hess transaction, and that will conclude later this year. We're always looking. We're a resource business. You're always looking to acquire good quality resource that makes your portfolio stronger. We've got a great position today, so we don't need to do anything. We would only do something if it really fit for our company, if the price were right, and it would create value for shareholders.
What type of industry, though? You've got natural gas, you've got oil, you have other types of forms. What would be the area you'd want to expand in?
Well, there's a couple of areas that are always of interest to us. One is oil and gas resources, because every day as you produce it, you have less in your portfolio. And so you need to replace that. We do it through exploration by finding new fields. We do it through technology to improve recoveries, and we do it through acquisitions. The other sector that's got really robust demand growth is petrochemicals. And as we have a larger middle class in this world, as we move towards more fuel-efficient modes of transportation and lighter weight airplanes and vehicles, much of that is the materials that go into that are derived from thermoplastic petrochemical products. They have lightweight, they have good durability and other rigidity and mechanical properties. So demand for petrochemicals will be strong. That's another sector that we'd be interested in.
Mike, this was perfect. Appreciate your time. Mike Wirth, everybody, from Chevron.